Good morning. Why multifamily construction is at record highs and what it means for investors. Well, multifamily construction in the United States has surged to historic levels, reshaping housing markets and creating both opportunities and risks for commercial real estate investors. So, from institutional capital flows to demographic demand and policy incentives, today's development boom is not accidental, it's structural. And for investors and business owners evaluating multifamily opportunities in markets like Houston, Katy, and Fulshear, understanding why construction is accelerating is essential to underwriting smarter deals and avoiding crowded trades. First reason is structural housing shortages are driving development. And the US entered the 2020s with a multi-million unit housing deficit. Years of underbuilding following the global financial crisis collided with population growth, immigration, and household formation. And multifamily housing became the fastest way to scale unit delivery, particularly in high growth Sunbelt markets. In Texas metros, including Houston, have been major beneficiaries due to business migration, job creation, and relative affordability compared to coastal markets. Two is capital has rotated into multifamily. Institutional investors, so think pension funds, real estate investment trusts, and private equity groups, have aggressively allocated capital to multifamily assets. And compared to office, retail, and apartments, they offer daily demand drivers, shorter lease terms that reset their rents periodically, usually a year, and historically lower volatility. And this wall of capital fuels development pipelines, especially for Class A and Class B assets in growth quarters. And number three is rent growth expectation justified the new supply. So from 2021 to 2023, rent growth outpaced inflation in many markets, and developers underwrote projects assuming continued household formation and wage growth. While rent growth has moderated recently, the projects breaking ground today were often financed years earlier under very different assumptions. And this explains why record deliveries can coincide with slowing rent growth, which is just a lag effect that investors must account for. Number four is government incentives and zoning support density. So local governments increasingly favor multifamily density near employment centers. So think near highways and mixed use districts. And they can offer tax abatements, and there could be opportunity zones as well as public private partnerships that have further accelerated development feasibility, particularly in Texas suburban markets. And five is interest rate volatility has changed the risk profile. So higher for longer interest rates have not stopped construction, they've just reshaped it. And many projects were financed with fixed rate construction debt. And rate caps were purchased early. And institutional equity with longer term horizons was available. Now, however, refinancing risk is now the primary threat, not occupancy. So, what this means for investors: record construction does not mean that multifamily is broken, but it does demand new discipline. And smart investors now are focusing on these topics. So, think sub-market level absorption, not national headlines. Think vintage risk, so new versus stabilized assets, or expense sensitivity under tighter margins. And it also forces investors to get real about exit cap rates. And markets like Katy and Fulshear continue to benefit from population inflows, but deal selection matters more than ever. And here's the final takeaway: multifamily construction is at record highs because demand, capital, and policy are all aligned at the same moment. And as supply peaks, the next phase of the cycle will reward investors who understand timing, structure, and local fundamentals, and they're not chasing yesterday's returns. So if you're buying, selling, or refinancing multifamily assets, this is a market that requires strategy, not speculation. That is it for the day. Please visit my website, Houston Real Estate Brokerage, to get a hold of me. Talk soon.